everybody, this is Mike Lung over at Allendale's trading floor. It is Thursday, October 29th, starting the day off with a little bit of follow through from yesterday's sell-off action. So as you can see, still holding a bit lower on the day, but is getting a bit of recovery after a bullish export sales report that just came out here at 7:30. So a little bit off your lows, but did break through that $4 threshold overnight for the corn and through the 10.50 threshold for beans. So potentially some more downwards. What we're looking at here is lockdown worries that continue to grip this market. That's going to be the big fear here with no stimulus bill, with lockdowns seeming to come back into place, and with an election right around the corner. You have a more risk-off mentality in some of these markets. Open interest in beans especially has been decreasing pretty heavily since last Friday. On the export side of things, corn exports came well above expectations, with beans right in the middle, wheat beating expectations as well, and meal and oil right in the middle of range. Oil on the lower end. As you can see here, the corn market, it did break through some good support levels, rifled right through the 10-day yesterday and through the 20-day here today. We'll be watching for a move down to this old trend line that's been intact since the uptrend has been in play, and also the old highs from back in earlier this month at 385 level that capped us for a couple days. So we'll be watching both of those in the corn, but the interesting thing is even with the setback, you continue to see open interest increase, so showing that this could be a correctionary move unless you do start to see this open interest start to fade away, showing a liquidation of positions at this point. On the bean side of things, you have seen this massive open interest decrease across the entire bean section. This is going to be the total open interest, not just for the November contract. So you are seeing that. You did get a breakout of this wedge that was forming. We'll be watching, since we went right through the 20-day here today, we'll be watching the old highs, which coincides with the lows that were posted earlier this month, as your next good level of support if this minor level of support does get broken here today. Wheat side of things, much like corn, still seeing open interest increase, moving a bit sideways after finding a nice rounded top to this market, finding some good support, whether it be the old trend line or the old highs that stopped us on the first setback we saw before making new contract highs on this wheat market. So something to be watching there. On the livestock side of things, you can disregard the cattle on feed and cold storage. That was last week, but you are seeing choice and select move a bit. Choice down a bit yesterday on the PM box beef, with select up. Carcass down 431 on yesterday's PM report. And you have the cattle market that is moving lower. You're starting to see an open interest increase here at the lower end, so could be forming a base. What you should be watching is these old lows that held us on the range bound last time. If we do break those here, potentially worrisome with this old gap still in play from the sell-off during the March coronavirus scare. So something to definitely be monitoring here. 10-day moving average should be holding some good support here today, or resistance here today. On the hog side of things, still have an uptrend in play, but getting a little wacky here. You got a gap that's in play from yesterday. You have potential for a head and shoulders top to move in here. You have an open interest that has completely decreased since this last run up and moving a bit sideways. So watch for these lows to come in play. You got a neckline that comes into place here with the gap fill as your upside resistance point that we'll be watching for today as well. Any questions, please give me a call, 815-578-6177. This is Mike Long over at Allendale. You guys have a great day.